What's up, everybody? It's your boy Satt with Stocks by Satt. No face, just facts in 5. Make sure to check out the affiliate links in the description and bio and tune in to the Stocks by Satt live stream for 24-hour tickers, news, and lo-fi trading vibes. Today, we're learning how to read an earnings report in 5 minutes. Alphabet, Tesla, Intel, Meta, and Amazon are all reporting across this week and next. Earnings season is here, but can you actually read the report? Think of an earnings report as a company's quarterly report card. You do not need every page. You need to answer a few questions. Are sales growing? Is profit improving? Are margins getting stronger? Is the company producing cash? And what does management expect next? So where do you find the report? Start with the source. Go to the company's investor relations website, open quarterly results, and find the official earnings release. If you don't know where to start, simply Google Company X Investor Relations website. This will usually take you to the correct resource. For more detail, open the SEC quarterly filing, usually the 10Q. It includes financial statements, risks, and operating results. Start with revenue. Revenue is the total money the company brought in from sales before expenses. If revenue was $10 billion last year and $12 billion this quarter, that is 20% growth. Compare actual revenue with Wall Street's estimate, compare it with the same quarter last year, and identify which business segment created the growth. Revenue tells you whether demand is expanding, but growing sales do not automatically mean growing profit. Next, you want to look at earnings per share, or EPS. EPS is the company's profit divided among its outstanding shares. If analysts expected $2 per share and the company reports $2.20, that is an EPS beat. Compare it with last year and check whether it is adjusted or reported. Revenue tells you what came in. EPS helps show what remained for shareholders. Next, look at profit margins. This answers one question. How much did the company keep? Imagine $100 in sales, $60 in costs, and $40 in gross profit. That equals a 40% gross margin. Gross margin follows direct costs, operating margin includes running costs, and net margin shows what remains after everything. Growing revenue is good, but growing revenue while margins collapse can be a warning. Next, let's dive into guidance. Earnings tell you what already happened. Guidance tells you what management expects next. A company can beat revenue and EPS, lower its next quarter forecast, and still watch the stock fall, because the market often cares more about tomorrow than yesterday. Listen for demand, expenses, capital spending, and growth. Guidance can be the main reason a stock surges or dies after earnings. Net income is next. It is not the same as cash in the bank. Operating cash flow shows cash generated by the core business. Capital expenditures show cash spent on long-term assets. Free cash flow equals operating cash flow minus capital spending. If operating cash flow is $5 billion and capital spending is $3 billion, free cash flow is $2 billion. A company can report accounting profit while burning cash, so ask whether the profit is turning into usable money. Bottom line, know the business. The same checklist works everywhere, but every company has special numbers that matter most. For Alphabet, watch advertising revenue, Google Cloud growth, and AI spending. For Tesla, watch deliveries, automotive margins, and free cash flow. For Intel, focus on gross margins, foundry losses, and data center growth. For Meta, watch advertising growth, user engagement, and capital spending. For Amazon, focus on AWS growth, operating income, and free cash flow. Next is knowing if earnings beat, miss, or were priced in. Compare actual results with analyst estimates, compare results with last year, and compare them with expectations already built into the stock price. A company can technically beat Wall Street and still fall because investors expected an even bigger beat. Stocks react to reality versus expectations, not simply good versus bad. So how do you put everything together? That's your checklist. Revenue and growth, EPS and margins, cash flow and debt, guidance, and company-specific numbers and market expectations. Do not read every page. Find the numbers that answer the right questions. Here's Satt's take. An earnings report is a story told through numbers. This is a 10 out of 10 must-know skill built around revenue, profit, guidance, and cash flow. Don't ask only whether the company beat. Ask what grew, what weakened, and what happens next. Remember, this is not financial advice. Do your research and never risk what you can't lose. Make sure to like to keep us in the algorithms, subscribe, and comment what you'd like to see next. This is Satt, and I'll catch y'all in the next one. Peace.